So here I spotted 3 very accurate price action patterns: ascending triangle, wedge pattern, and the head and shoulders pattern. In this video I'll teach you how to trade these patterns. We'll discuss how to set stop loss, how to select the entry, and how to choose the targets. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. Alright traders, the first pattern that we'll discuss is the ascending triangle. And I spotted ascending triangle on a dollar-yen pair on an hourly time frame. Traders, your first task when you trade the price action pattern is to check whether it is formed on a key level or not. With my students, we have a very strict rules for pattern trading. We trade the patterns that are formed only on key levels. So we check key levels on higher time frames. Yes, and we are looking for key levels on a daily time frame. So opening a daily time frame, our task is to briefly analyze the structure and check where the market is trading right now. You can see that indeed the pattern that we spotted is formed on a very strong horizontal key level. You can see that in the past it was a very strong resistance, and after the breakout it turned into support, from where the market was nicely rejected and where we formed, by the way, a cute doji candle. So such a triangle that we spotted on an hourly time frame, we will trade because it is formed on a key level. Hey guys, get exclusive trading signals with entry, stop and targets in my premium signals group. You will get trading signals on forex, gold, silver and oil. You will get 61% win rate and 500 peps weekly. For more info, check my website. It is vasilytrader.com/trading signals, the link in the description below, or text me in one of the social networks. I will give you more details. Trading the ascending triangle, it is very important for us to identify the neckline of the pattern. And the neckline of the pattern will be based on the wicks and the highest candle close of the pattern. Take a look, traders. Here is our neckline, that entire area. And for us, it is very important to underline the neckline because based on the neckline, we will select our entry. According to my rules, the entry for trading the ascending triangle formation is the lower boundary of the neckline, the highest candle close within. So here will be our entry level. Now, where will be our stop loss? Trading the ascending triangle, with my students, we follow a very conservative approach. We always set our stop loss below the lows of the pattern. In my view, such a stop placement gives you safety. Yes, and by the way, if you want to learn how to set stop loss, watch this video. There I explained my detailed strategy for stop loss placement. So our stop loss is lying below the lows of the pattern. Where will be our target? For targets, we always look left and check the closest key levels. And you can see, traders, that, for example, right here, we have a very peculiar structure, a very strong key level. But measuring risk to reward, you can see that here we have negative risk to reward, below 1. And such a structure then is not appropriate for the initial target. We should check the higher structure. We have a higher structure right here as well. Yes, this very strong resistance. In measuring our risk to reward, you can see that here we have very positive and nice risk to reward. But one more important tip for you traders is that you shouldn't neglect that horizontal structure here. You can see that in the past it was very important for the market participants. It was a very strong support first, and after the breakout it turned into resistance. So once its lower boundary is reached, move your stop loss to entry and make your position risk-free. That is what we call the position protection. So that is our strategy for trading the triangle. And what you do now, you simply set your buy limit order on the entry level, set stop loss, target, set alert on the break-even level. That's it. That is how you trade this pattern. Now watch how to trade the head and shoulders pattern. Here on New Zealand Swiss pair, I see a very cute head and shoulders pattern. And again, traders, our first rule is to check whether the pattern that we spotted is formed on a key level. So let's open a daily time frame and let's check if we have any key level right here. The fact is that we don't have any horizontal structure right here. But if we analyze the historical price action, we may spot right here a very peculiar trend line. Take a look. And you can see how nicely the market respected that trend line in the past, trading in a bearish trend, strong bearish waves initiated from that trend line. And head and shoulders pattern that we spotted is formed on that trend line. So such a pattern we can trade. By the way, you can see that we can spot this pattern on an hourly time frame, but also it is recognizable on a 4-hour. And when the pattern is recognizable on multiple time frames, choose the highest time frame where you see it. It is the tip for you. So similar to the triangle, trading head and shoulders pattern, it is very important to correctly underline the neckline. The neckline of the head and shoulders pattern will be based on the lowest wick and lowest candle close. So here will be our narrow neckline. And you can see that for now the market is still trading above the neckline. The neckline is not broken. So in order to trade this head and shoulders pattern, you will need a breakout of that neckline. You will need a 4-hour candle close below that first. It will be a very important condition. Then you will set your sell limit order on a retest. And here your entry will be the upper boundary of the neckline, the lowest candle close. From that level, you will short. Now, about stop loss. There are two ways to set stop loss, above the right shoulder or the head. And with my students, again, we do it very conservatively and we set our stop loss above the head. How about our target for the trade? Our target will be the closest strong structure. And I see a very strong intraday key level right here. Yes, you can see how nicely it was respected by the market in the recent past. So here will be our trade. And now let's identify the level from where we will start protection of our trading position. Take a look. Right here, traders, we have a minor structure support. And I would suggest moving your stop loss to entry once that level is reached. You can see that even though we cannot call that a key level, still recently for the market participants it was quite important. So once it is reached, stop loss will be moved to entry and our position will become risk-free. By the way, a little tip for you right here. In order to not miss the breakout attempt of a neckline, don't forget to set alert on that. Once the market then tests the neckline, you will get the notification from your broker. Last but not least is the falling wedge pattern that is spotted on a dollar CAD pair on a 4-hour time frame. And trading the wedges, remember, if you spotted a falling wedge pattern, you should check whether the lows of the wedge are lying on key level. So again, let's open a daily time frame and let's briefly execute the so-called key levels check. You can see that right here we have a very nice horizontal key level from where just recently we saw a very strong bullish movement. And by the way, where the price recently formed a doji candle on a daily time frame. So the wedge that we spotted on a 4-hour time frame is valid and we can trade that. And you can see that here the price already violated the resistance of the wedge. Can we buy the market right now, or should you wait for something else? Again, here, traders, there are two different ways to trade the wedge. You can trade it aggressively or conservatively. Trading that aggressively, you simply buy the retest of a broken resistance of the wedge. But trading conservatively, you also check the horizontal structures on the left, and you are waiting not only for a breakout of the resistance of the wedge, but also for a breakout of a horizontal structure. Take a look what I mean. Here on the left, you can see that we have a key level right here, Yes, this one. And we have a level right here. These two levels compose, in fact, a very strong horizontal zone of supply. Yes, that was respected many times in a row, just recently by the market participants. And the fact is that the market may initiate a bearish movement from that. The market may initiate a strong bearish move from that blue area. And in order to not be caught by a false breakout of a wedge, what we will look for? We will look for a bullish breakout of that blue area to the upside. Yes, we will look for a 4-hour candle close above that entire area as well. And only then we will set our buy limit order on a retest of a broken zone of supply, right? So our entry will be right here, slower boundary. Our stop loss will lie below the lows of the wedge, and our target will be the closest strong resistance. Right here it goes. Here's our very, very strong resistance. Yes, you can see how nicely this one right here was respected in the recent past. So the approach, such an approach to trade the wedge pattern is very sophisticated. And I use such an approach because with my experience, I found out that the breakout of the wedge of its resistance quite often is false. Yes, and false breakout give you a losing trade if you trade that. So instead I was looking for some extra layer of protection. And breakout of the horizontal structure, of the closest horizontal structure as the extra confirmation appeared to be a very, very efficient solution. Yes, so that is how we trade the wedge pattern. So that is how we trade the price action patterns. Let me know, traders, in the comment section if you have any questions concerning my strategy for trading these patterns. Also, let me know in the comment section what pattern do you want to learn in the next video. Remember, traders, that you can get my exclusive signals with entry, stop, and target on my signal service. The link in the description below. Also, traders, please like this video, subscribe to my YouTube channel, and I will see you next week. Thank you so much for watching.